What's up? What's up? It was a great day for taking a nap. I caught up on some of my sleep from my when my kids were in town, running around, running me ragged. And the good news is it's going to get slower the rest of the week. You can assume that every day that goes on, it's going to get less. Good afternoon. And then barring some major news item, it's going to get worse. Okay. It doesn't mean you can't make money, but for my money, I'll be doing other things. But we came off, I came off the highs a little bit of a double top, but again, I don't necessarily believe in double tops in an uptrend. I like double tops in a downtrend. Uh, but you've got the morons from the Federal Reserve. You had Jerome Powell talking in Cornhole, Wyoming, and said that they're going to probably cut rates. And of course, the markets exploded. My question to all of you is, why is that so important? Why would the average investor care if they're going to cut rates? Who actually benefits from the rate cut? That would be my question to you. Why is assumed to be so bullish? Okay. Anybody want to take a whack at that one? Anybody want to take a shot at the title? Perception, home buyers, inflation. Okay, good answers. A rate cut's going to spike inflation. Is that good for us? Is a spike in inflation of already high prices, is that good for us? Okay, my answer would be no. Okay. Home buyers, you remember, let's be clear about this. Okay. The market, the borrowing rate that you borrow money at, okay, does not necessarily mean that just because the Fed cuts rates, they're not cutting rates to you, the consumer. They are cutting rates to the banks, to their lending rate. Does everybody understand that? That's what the Federal Reserve is. That's what the Fed funds are for banks to borrow. That's their rate to borrow from the Federal Reserve. Do you all understand that? And it's okay if you don't, but I'm curious. Do you understand that that's what that rate is? Yes, but the president wants it. What the fuck do I care if the president wants it or not? The president is wrong. Okay. It isn't helping crypto. No. Well, cryptos have been up, but we'll get to that. Okay. It does not necessarily trickle down. Let's go back. I've mentioned this to you before, but now we're going to get to see it in action once again. 1 year ago, at the September meeting, the Fed started, they had two cuts last year. Does everybody remember that? They had two cuts. I believe it was September and December, but I don't remember. But September and whatever. They cut 100 basis points last year. Do you all remember that? Okay. At the same time, so within the last 12 calendar months, the Fed funds rate has come down 100 basis points or 1%. The 10-year notes have gone up 100 basis points or 1%. So all that has happened in the last year since the last cut is the banks have made more money because their spread on borrowing to lending has increased. You and me, the consumer, have got no benefit out of that lower cut rate. Do you understand that now? Okay, think about that. Okay. So just because the Federal Reserve cuts the rate to the banks does not mean the banks have to pass that on to you. And this is where the misconception. Now, again, we all know that if you're among the very wealthy, the ability to borrow money is easier and you're going to get an advantage of that rate. But the average guy on the street is not going to get a benefit from any rate. First of all, the average guy on the street can't afford to borrow money anyway, so it doesn't really matter, does it? Mortgage rates are not coming down. Housing's in trouble anyways. So at the end of the day, why the big excitement for the market? Okay, I hate rate cuts. If it's up to the bond market, which older people like because of save money, that's another point. It hurts the fixed income market. Okay. Look, I'm all for our debt service to be lower as a country, but I'm more for the debt service. I'm more saying, why don't we quit spending so much money? Why don't we quit giving away our money? Okay. The big, beautiful bill brought in a ton of new debt that's going to be on the books. And you know, I'm a Trump supporter. Okay. But I don't want to see the spending. Okay. Let's stop spending. Let's quit giving the money away. Okay. So, anyways, good afternoon. Okay. Uh, I think that, we've got, a lot of issues. I mean, jobs suck. Now, jobs are going to be probably, I would guess, are going to be bad again. I don't know. I would guess. I see a lot of layoffs. I don't see a lot of hiring. And the real problem with the jobs is what? They're not being replaced because basically you're seeing as older people either get bought out or get out of the workforce, many are not being replaced because those jobs are being replaced by what? AI. Okay. Now, AI might be a great tool. Okay. The fake student borrows. Yeah. AI might be a great tool. Okay. But is it great enough that you want to reduce the amount of jobs that are available to people? We think that all these things are so wonderful. Now, Elon Musk, he's a pretty good capitalist. Would anybody disagree that he's a pretty good capitalist, Elon Musk? When a guy like that comes out and says universal basic income because of AI, that is telling you that any job coming forward that can be replaced by AI will be replaced and will not be put in with a human being. Okay? It's a scary time if you ask me. Okay. Secondly, as rates fall, banks sense weakness in credit, so they increase interest rates on credit. Yes. Listen, we the consumer always get fucked. Excuse me if you're offended by my language, but we the consumer always get fucked. Okay. 4 out of 5 jobs are replaced by AI. Wouldn't be a surprise to me at all. Listen, when I go to the doctor, it's like going for AI because they don't look at me, they don't touch me, they just keep asking me questions and typing into a computer. So, anyways, look, again, I'm not saying bad, good. I don't think the rate cut deserves the rally in the market. I still believe the housing market's in trouble. I still believe the banks are in trouble. And I think the Fed is trying to get ahead of that. And by the way, just so if you don't know, interest rates are not the Fed's mandate. Okay. Price stability is the mandate, and jobs is the mandate. That's it. Okay. So, again, at the end of the day, we got things that are not good. Okay, we got things that are problematic. Okay, but again, hey, it is what it is. We as traders, investors have to be prepared for whatever is going to happen. Our job is not to predict what they're going to do. Our job is to react to what they do. Okay, that's our job, is to react to what we see in the markets. Okay. Globalism is the Fed's. Yeah, well, that's true. Central banks, the central banking system, which is what the Federal Reserve is, has been screwing people since their inception in the 1600s in England. Okay. Why else do you think that in 1985, the house to average income was 3 times? Okay. The cost of a house, the average income was 3 times what your annual income was. Today, it's almost 8 times. what your income is. Okay. Where did all that money go? That is phony, bogus, bullshit inflation. That is not good. There is good inflation. When demand is heavy and hard, that is good inflation. Okay. When it's built by demand. When inflation is built because the government continues to spend and steal your money, that is not good inflation. That is bad inflation. Okay. Boy, I've been bitching. Boy, I'm on fire today. Anyways, Connie, you ready, honey? I know you are, but I have to ask. I have to give you the courtesy to ask you. Thank you. All right. So again, markets were blah 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 today. Again, nothing going on. There's really not much to do. We had two trades, day trade this morning, lost. Uh, got stopped out on both on tighter stops. If we had used wider stops as normal, we wouldn't have got stopped out. But it is what it is. Okay. There wasn't much to do, and I said I didn't like the trades anyways, if you recall. But in the meantime, the dollar, well, nothing has changed. Here was last Monday. Here is today. So here we are in this tight little box. Okay. Now again, I don't like to set too tight of parameters when I'm dealing with a market that we have right now. I think because the potential for bigger moves is greater right now because of the thinness in the market. It takes a much smaller order to drive markets farther than normal. So for us, we will continue to stick with 97 to 99. But you can see it's a much tighter spread right now. Now, we don't trade it anyways, and that's only because the criminals in New York at the exchange want too much money. So screw them. The euro currency, virtually the same thing. The levels have not changed. Again, notice for the third week, levels are not changing. We'll go 115 to 118. Okay. But again, I expect you have NVIDIA, you have some big earnings this week, NVIDIA, crowd. But other than those stocks and maybe the NASDAQ, I don't expect much action. And I don't know that there's going to be, unless you're willing to step in front of it, real opportunity. Okay. Remember, okay, when you look at it afterwards, you go, oh, I could have done this and this. But when you see it or watch it in the heat of battle, sometimes those trades aren't as good because they go farther than you would have thought, and they might have stuck it to you pretty good. Again, this is going to be a very treacherous earnings, I think, on NVIDIA. Now, full disclosure, the Saturday call, we have a position in NVIDIA. But overall, honestly, I will tell you that the odds of me being in my office after we trade live in the morning are probably maybe 5% chance that I'll be here. Okay. The notes, we have no position, but again, they're just sideways. Okay. Now, again, you can see where we're at. I think you're back to about 112 and a half in the 10-year notes is resistance. I think 111 is support, but I think they're going all the way back down to 110. I think that this will all wind out. Okay. When it all comes to said and done, I think that the 10 years are going over 5%, if not farther. Okay. But we'll see. The bonds, Zulu Bravo, again, very tight range. Nothing's changed. 114 to 117. Okay. I would be a seller. I would be a blind seller at 117. Bitcoin got clobbered today. But again, forget about what happened today. Forget about the big number of 5,800. Okay. First of all, 5,800, okay, is 5%. Okay, big move. But this product moves big. If you looked at this chart, didn't know what it was, didn't know what the prices were, would you be looking to be a potential buyer or a seller? Okay. So I'm asking you to put aside your biases. I'm asking you to put aside what you see here. If you looked at this, it's just any chart with no price in it, but just a pattern. Would you rather buy it or sell it? Okay. I mean, I think it's oversold. Okay. I think it's probably due for a bounce. And again, so at the end of the day, I'm not going to change. We're still 110 to 125. Okay. Again, I think there's is an opportunity. And if the SEC gets off their dead ass, okay, I had a discussion today. Did an interview today, and I said the SEC and FINRA are crap. They only care about Schwab and they only care about Schwab and TD Ameritrade and the likes of those, big brokers, because they're not on your side. The SEC, and he goes, well, oh, geez, they're really cracking the Nasdaq. They go, the SEC's, they're not on your side, the consumer. They're on the side of the broker. They don't care about the consumer. Why else do you think they'd have such shitty restrictions? Okay. In the meantime, 110 to 125. Gold, golf, Charlie, virtually no action for almost more than a week. I mean, look at how tight this range is. I'm going to stick, Connie, with 33.35, 3335. But look at how tight this range is. You know what that means, right? That means that there's a very large move coming. Which way? I'd have to guess it would be up, okay, based on past data. But we've really legitimately been in consolidation since at least May. Silver, again, down a little bit, but off the pop, got overbought, a little bit of a pullback, 39.37. Okay. So we've come up from 36, but we're still in a tight little range. And of course, markets that get stuck in range bound. Wow. Here, let's take a look real quick. Well, we're together. Look at that. Every week we get something. This week it's down. Last week it was up. Okay. So at the end of the day, okay, this looks great, this chart. Okay. Overall, and again, it goes back to what is your time horizon? Are you investing? Are you trading it? Okay. I mean, I think silver is going to get, I would guess silver is going to be in the 40s before the year is out. But for today, 37 to 39. Platinum, which we don't trade, but certainly I would look to be a buyer. I think 1300 is still the area, and I think 1400 is still the resistance. Again, not much has changed from week to week. Not much has changed recently because volume is drying up, the markets are drying up. Well, again, so what does that leave for us? Copper, still just in this little range. I think now we have more proof. Basically, if you understand chart patterns, there's called inside days. Okay. We have basically been inside this one big down day from July 31st. We haven't been outside of either range. Now we can firmly say that resistance is probably at 454, support still being 436. Okay. But we have enough evidence to change where our resistance level was. Grains, as I said last week, I thought we'd start to see a little bit of a bounce, a little bit of action to the upside. Now, this has a big gap, but it's not truly a gap. It's because of the contract. We'll just use December again. It just makes more sense to look at December wheat right now. Okay. And there you go. But we did find a little bit of a bottom. We're still in a range, 520 to 540. But they do look like they want to start to move up a little bit. Corn, 380 now to $4. But if I were going to take a shot, okay, again, I'm not recommending it. I'm just saying, if I were going to gamble and take a shot, I'm a buyer of all the grains across the board. Okay. If I were going to gamble and take a shot, okay. And soybeans, which had a great sell-off today, which is great based on the action of the market. But we have now taken support from 980 to 1020. Now I think support is at 1030. Okay. And resistance is now 1060. It's pretty clear. Okay. And again, when you watch these levels during the week, you'll see how good these levels that I give you every week actually are. Because the levels I give you have been spot on a pretty regular basis. Okay. They give you a good guide as to whether you want to buy, sell, or do nothing. Okay. Our levels have been, you can see, I mean, I leave all the lines in all the time. You can see how the levels play. We don't draw them in after, we draw them in front. Cattle, yeah, down a little bit today, but look at this. I mean, again, there's a lot of reasons to believe cattle's going lower. Okay. But I am not shorting it anymore right now. Okay. But certainly under all circumstances, there's a high probability of a sell-off. But again, I'm not going to get in front of this. Okay. There's no reason to. I don't get it. Of course, I did take out everybody to dinner on Saturday night. There were 9 of us to a steakhouse. It was really an inexpensive bill too, $1,800. So, anyways, I would suggest that if you want to take a crack at it, maybe at 240. But I am not. I personally will not be shorting this. I think it's 232 to 240. Again, I don't get it. I've seen this before. This chart reminds me of the '90s internet bubble. And again, this is a problem. So again, I'm not going to trade it right now. I'm going to wait for a better opportunity. Feeder kettle, which I don't trade again. New highs once again. They just keep making new highs. Like everything is great. Okay. So remember that. Okay. The only thing I can give you here is support 350. I could actually, if I wanted to, make it 355. But I'm not going to trade anyway, so it doesn't really matter. Hogs continue to be somewhat stagnant. Let's change this to October. Yeah, you can see very much sideways. If I were to make a trade in hogs right now, I'd be looking to be a seller, not a buyer. Okay, at 92, I think you're 88 to 92. Okay, and natural gas, well, again, I was wrong. I bought it. Okay, I'm still holding it. Okay, again, I'm playing the weather right now in natural gas. Okay, I'm looking for any reason you get a snap cold streak here because it will affect it. Not obviously, it's not from 80 to 60. It's like, get a couple of days down into the 50s or the 40s. Okay, in some parts of the country, you could see this spike. And of course, if you look at, they call it the curve, or you look at the outward prices, you'll see that natural gas gets more expensive as we get more into winter. Okay, you're at 260, 280, 314, 374 bucks. Okay. Now again, if you get a cold snap, there is a good chance. So listen, this is not called the Widowmaker for nothing. This is a very wild product. Can get crazy. But down here at 269 or 270, if you're willing to gamble, I think this is a pretty good spot. In the meantime, I think support is about 262 or 260. We'll make it 260. Easy. 260. Okay. And I think it's got an outstanding chance to run all the way back to $3. Okay. And crude up today. But again, right off of our 62, and now we're going back to our 66. So basically, nothing has changed. 62 to 66. Okay. Anybody have any questions on part 1? Okay. But pretty basic, not a lot of action, not a lot to do, not a lot of reasons to get overly excited about anything, because again, it's very frustrating when there's not much to do.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.